Good evening, everybody. I am going to start off with an apology. Tonight we were supposed to be doing logical stop losses, but I kept looking at the calendar and seeing that Dr. Barry Burns was going to be on tonight. And then Becky just reminded me that's next week, not this week. So I am not prepared, but I will build into as best I can uh, uh, where stop losses should be and what the rationale should be, and I'll try to remember some of the charts that that was illustrated. So I apologized, and I sat around upstairs just doodling around, not thinking, oh, I'm just going to be introducing tonight. So I'll try to build in as much as I can, but we will reschedule the stop loss session. We might have to even do a special session like on a Wednesday night. Yeah, sometimes I'm more human than everybody else. So okay, so start off with our normal, the markets. The Dow, as you can see, is in this nice fry pan bottom, which should imply, I'm going to make this smaller, that we're still in a strong uptrend because this is not a oh, what do I say, ah, this is a buildup of investor sentiment. It's not a one-time thing. So investor sentiment is building up, implying there's going to be more upside. So the nice thing about this market, as far as knowing what your positioning should be, is there's a lot of stocks, a lot of sectors right now that are very bullish, and there's a lot of sectors right now that are very bearish. So there's, I don't know whether the right word is dichotomy or, but as soon as the NASDAQ did a bearish doji sandwich below the T line, it was time to start adding short positions. And so this helps out quite a bit. And I say this helps out quite a bit. It took me a good number of slapping the heads. And when I saw one of the indexes close below the T line, my my inclination was always, oh, maybe this is just a faux here, and they're ready to take it back up. Now, through the years, I've learned that if you see a sell signal and a close below the T line, that's telling you something. That's telling you investor sentiment has changed, and you want to be a lot more aggressive as far as coming out of long positions that aren't working and adding short positions. When I do that without hesitation, I've discovered I'm much happier that I've switched positioning. So let's go down through some of the ones, and I'm going to kind of have to ad lib as we go. We've got a lot of breakouts going on. First of all, in the gold sector, in the mining sector, you can see where there was a definite breakout of Hecla today with a morning star signal, scoop type pattern, and then your best friend breakout. That's an implication that there's going to be a lot more upside. Pause, same type of situation. Now I got this darn line on here. Let's make this a lot smaller. We've got a resistance level right here. We've had, and this is just kind of simple observations. Down, up, whoop, down with only halfway, and we can see the kicker signal supporting here on the 50. So they aren't selling it off like they had been. This is usually an indication that they sold it off, and now there's a lot more strength going into wave 3. So if this is wave 1 of a J-hook that we can see reversed for the kicker signal, and now a breakout, and it almost looks like a trend kicker signal today. It is. That's telling you they're going to go through this level. That becomes a high probability trade setup. No, not necessarily, unless you, Jake, it's not a point of saying, all right, should we be buying this one? It's a point of, yeah, now we have to analyze it. Is it going to do a 45 degree off of here? And if it does, maybe we're not just buying the stock. Maybe we're buying spreads or something that's going to take advantage of this information of a breakout. So anytime we see that breakout, we know we can put on some sort of strategy. For example, our recommendation on Nucor was based upon, you can see the obvious fry pan bottom. You can see the little dimple scoop type pattern, followed by a doji sandwich, and then a breakout. That was just a high probability setup to start going long. So I always put in here that this is not rocket science. This is just identifying what investor sentiment does time after time. So here's one in that sector of mining that you might want to go after. No, HT, if you're not in this one now, this is just an illustration. Anytime people ask, should we be buying now? The answer is, if it's already moved, where should you have been buying? So this is how you kind of, or not you, but this is how I learned what really was effective. When I saw something like this, I would go back and say, all right, that's already had a good move. Where should I have bought? Well, there's a pattern, and there's the place I should have been buying. So this should be an illustration of what to do at the breakout points. Not necessarily saying, all right, it's time to be buying the stock. This is what we expect from those breakout points. But HT, it's not that you miss the bus. All you're doing is recognizing when the bus left the station. Because there is this setup right here and probably 2 or 3 other places today. You just have to find where they are. This is to illustrate what that pattern should be doing. So would I be buying Hecla? Not with the same strategy as I might a stock that's about ready to break out. For example, we can pretty much identify what's happening here. We also can go back and say, should we have been buying here? Should we have been buying here? We could have been buying here because of the J-hook. And we can be buying on positive trading tomorrow because of the bigger J-hook. But if you were looking at this right here, your question should have been, where should I have been buying? What was the prerequisite or what was the prelude to tell me something big was going to happen? So when we go through charts like this, it's to not recognize or say, oh, this is a good trade, you could be buying it. We should be recognizing where should we have been buying it. Now, obviously, it's not as obvious at this point. So what are we doing at this point? We're trying to recognize what our high probability trade situations are. Like there's a little best friend gap up through the resistance level. That's what's going to put us in these type of situations. Closed Heckler today. Oh, was that an option? Good. Yes. So SID is buyable. I wouldn't have bought it here. I wouldn't have bought it here. I probably wouldn't have bought it here. But I would be buying it here because now we have a new pattern. We can see the J-hook pattern setting up. This tells me I've now got a much better probability that we're heading higher because of that pattern. I think all platforms you can set alerts for prices. I had one, E1 a new core. Okay, good. All right. Yes. With technology, there's tons of ways to get ready for a pattern setup. So right now, we recommended HZO a few days back, I think also based upon this J-hook pattern. Is it a place to be buying? No, but now this becomes a new place to be buying if it breaks out through that level. Expecting the J-hook, yes, on SID. Yeah, so this is what is your analysis. What type of pattern is it setting up? And if we know what the pattern is, a J-hook pattern, then we know what to expect on our entry and our exit. Now, if this opened positive tomorrow, that's the word you want to be using, Brad, is expectation. No, that's not the right word. Expectation. If this opens positive tomorrow, what is our expectation based upon a J-hook pattern that we're in wave 3? What would tell us that if this opened positive, what would get us back out of this trade? If it closed back below here and did a bearish engulfing at the same level it sold off before, would that tell us about our breakout? It didn't break out. It might be more of a double top. Yes, gold is, whoops, that's not the one I want. I thought it was this one. Yeah, gold, as you can see, is still in this strong uptrend with a J-hook pattern setting up also. So if this is wave 1, where do you think wave 3 could take you to? Right now heading back up to the 200-day moving average. So here's 2 plus 2. If we know gold is still heading higher, what do you think that's going to be doing to the gold stocks? You can start buying some of these gold-related stocks on strength. I don't think of, did I do ego? Yeah, so if you can, yeah, if gold is moving higher, silver is moving higher, all these stocks have higher probabilities of moving higher. So look at what happened on SVM Monday. I think it was Monday, Tuesday, Wednesday, Thursday, yes. It broke out, but then it didn't confirm. Pulled back right to the T line. Now what do you have? A kicker type signal or a gap up from a hammer signal. So what's this tell us? After it's supported here at the 50, now it's done a J-hook after a breakout. If it trades positive, where do you think this one's going to? Wave 1, wave 2, wave 3 is probably taking you up here. So it wasn't a buy this day, obviously not a buy this day, but it's probably a buy tomorrow if it opens positive. Let's see, on SID, we went approximately from 6 to 9, 3 points or 50%. So when you set an expectation of wave 3, do you expect 3 points or 50%? 3 points. Same price magnitude. Except the difference could be, this is wave 1, that trajectory. Wave 3 could be this trajectory, so it can move a lot faster. Okay. So we had questions today. Where would you put your stop on this chart? Well, you can see what's happening right here, kind of a little bobble breakout, T-line crunch. But what is the major pattern on this chart? Kind of a big fry pan bottom. And what is our simple fry pan bottom T-line rule? Very simple. You can stay long as you don't see a sell signal and a close back below the T-line. That takes the anxiety out of days like this. When it's pulled back, you just have to kind of sit there, or at least I do, and say, "Yep, not too worried because it's a fry pan bottom, and they haven't changed investor sentiment until they close below the T-line." So anytime you close below the T-line, no matter how strong your buy signal is, it closes back below the T-line. Just yeah, so you're going to have down days. But if you close below the T-line, just remember one statistical probability. The statistical probability is when you close below the T-line, the probabilities are extremely strong that the bears are in control, close out the position. No matter how much I know about QuantumScape, because of us looking into the lithium battery area, when it came up, looked good, but as soon as it closed below the T-line, it doesn't matter what we think or what we expect. What we're looking at is what is the market telling us it's doing. And no matter how positive you are on a stock, and this is what keeps my emotions out of my trading, I've learned now that no matter what I think about the stock, as soon as it closes below the T-line, I want to close out that trade. That same emotional thing occurred this week in OCGN. There was our scoop. There was our J-hook pattern. There was our gap out through the J-hook. Everything looks great for this going much higher. But the next day when they gapped it down below the previous day's open, there's only one thing you want to do. Just logic says if this is in an uptrend, you're that far away from the T-line and you're expecting it to fulfill the J-hook pattern, but they gap it down below the previous day's open, that's not the bullish sentiment that you want to, that's a bearish kicker, yes. So as soon as you see it opening below the previous day's open, I tell myself, don't do anything. Close out the trade immediately. Because what are we hoping for? We're hoping they open it lower and they're going to take it back up. That'll occur maybe 2% of the time. If they've gapped it down, that means there's a change of investor sentiment, close out the position. Joseph, I've got a couple accounts where it's sitting long-term and just planning to hold on to it. The other accounts on QuantumScape we've closed out, not with the idea that we're not going to look at it anymore. Maybe it does a double bottom here. We're coming back into it. So just because we've closed something out doesn't mean it's down for the count. Just wait for the next buy signal. Yeah, DJ, it doesn't matter what the prospects were. The fact that whatever, it doesn't matter what the facts might be. Remember, prices don't move based upon fundamentals. Prices move based upon the perception of fundamentals. When they gapped it down and started trading it off, that means investor sentiment had changed. And that's the thing we need to recognize quickly. All right, so here's another one, EJRI. Whoops, I was going to say when it closed below the T-line today, it should have been closed out. However, as you can see, the scoop pattern still hasn't closed below the T-line. Had it closed below the T-line, you would have closed this one out. Mark, we can't make that analysis. I'll go back there in a second. So if you're long this because of the scoop pattern, double bottom, inverted hammer, morning star signal, the strategy is very simple. It has to open positive and trade positive to stay in it. If it opens lower, you close it out. So the one thing, OCGN as you see, your stochastics are still heading down. You still have a doji, but that doji isn't in at the top or the bottom of a range. That was just a doji day. Now you have to see where it's going to open tomorrow. Yes. When do they report their earnings tomorrow? T-line is the 8 exponential moving average. So if they're reporting tomorrow before the open, you'll have a good indication of what they think about the earnings. Joseph, yeah, I mentioned that the other day, that it is pretty much in the oversold area. Bah humbug. I mean, I would consider that close enough to the oversold area, and the fact that it is an inverted hammer morning star signal is pretty much confirmation, plus the scoop pattern, that once it got up above the T-line, your T-line rule went into effect. You stay long as it stays above the T-line. Okay, Ray, yep, and that's all. But all that information should be built into the prices already. I think didn't Pfizer get whacked? Got whacked yesterday. Now there's your perfect example of a long-legged doji. So whatever the news was yesterday that it reacted to, we could see what the investor sentiment was. Pretty indecisive. And what is our rule about a doji? They're going to move it in the direction of how they open it the next day. Right now, I would probably be out of Pfizer because it now doesn't have any direction. Let's see, Mike, I have a question. Why would a stock like Roku, which popped 30 points after the market on strong earnings, be talked about by some traders as having the potential of going lower again after a short-term pop? Mike, the answer to that is some traders are allowed to say whatever they want to. Analysts are allowed to say whatever they want to. Kramer's allowed to say whatever they want to. There is only one true indicator in the market, and that is the market itself. No matter what somebody says, no matter what somebody projects, let the market tell you what the market is doing. So Roku, it's getting toward the oversold area. May have come up a little bit. It's still not doing a reversal signal. So right now, I would just stay short if I was short. That's right. William, that's what, when it finally dawned on me, or at least I banged it into my own head, that prices do not move based upon everybody's projections, everybody's talk. Prices move based upon what the chart is telling you. So here's a case too, and this is why you always want to see where it closes. Nice consolidation. Now you've got either a hanging man harami or just a consolidation. So why is the simple doji rule effective? Because if this opens positive, our trend is still in progress, still in a J-hook. If it opens lower, that means it's time to take profits. Now, I don't think any of the oil stocks right now are selling off. There's a J-hook pattern setting up in an Apache. There's kind of your fry pan bottom in Occidental. Consolidated back to the T-line on EOG. The big oils, ExxonMobil, you can see that's still coming out of this doji sandwich, still heading up. So, no, I'm getting off track as far as. So things like PBF, even on a down day or a down day in an uptrend, you still have to have a sell signal, or it's just a down day or a down day in an uptrend. So with that breakout, what type of pattern do we expect? A 45 degree. So what would really tell us that 45 degree is over? Probably if they closed it back below the halfway point of this candle, which would also be the T-line. Raj, not getting in necessarily. Yeah, probably I would not be buying this one. I'd be holding it, but I wouldn't be buying it. There's too many other ones that have much better risk reward. Apache, for example, that's just coming out of a J-hook pattern. That has a lot better upside potential. Higher low on an uptrend. Okay. Okay. The shorts have been working extremely well. This is why knowing what should happen or what shouldn't happen, when they came back up, kind of a little scoop pattern, how long do we hold on to this scoop pattern until we see a sell signal and a close below the T-line? What added to our analysis on this one? A bearish engulfing signal right smack dab at the 50. The next day they open it lower and close below the T-line. What's that pretty much tell us? They weren't going through the 50. We were still in a downtrend. This is what puts you in high probability trade situations. When you see this rolling over, look at your bearish doji sandwich right here. What's a bearish doji sandwich imply? There's going to be more downside. When this gap down started trading lower, what other indicator did it tell us it was breaching? I know this little support level right here. Another reason why the probabilities were increased. Art, I don't think it's they follow each other. They're all trying to outguess each other. So it's not the institutions that are all calling each other up and saying, hey, it's time to sell the high techs or it's time to buy this. It's kind of their same analysis setups. And a lot of it is just simply watching to see what everybody's decisions are at support and resistance levels. Art, they do kind of act independently of each other. But part of their research is to see what everybody else's research is doing. Yeah, and so there's always that question of, well, the computerized trading, doesn't that change the investor sentiment? No, all the computerized trading is based upon formulas created by humans. So when we can see patterns, like there was your dumpling top, and then there's a gap down, there was your sell signals, a sell signal and a close below the T line. So here's that information that if this is going to be a J-hook pattern, what should we have seen on this day? Positive trading. The fact that we saw a bearish Harami, would that tell us immediately? The buying had stopped right here at the same level it stopped before. Well, we could get ready to buy it if it came back up through the next day, which would have meant it needed to open positive and trade up through this level. Oh, bearish engulfing signal. The stochastic's rolling over. So if that is a sell signal, logic says if that's a sell signal, and 2 days later there's another sell signal, who's in control? The sellers. What'd that tell you about your J-hook pattern breakout? It's not there. Now, we're down here in the oversold area, and we have a hammer signal. What's that tell us if we were short? Hammer signal 1, and where did the hammer signal occur? Right here at this, right here at this level where everything bottomed out before. If I was short this one, where would my logical stop be? Right here, today's open. If it came up through there, it's confirming that it's supporting there. On Daku, if you would have bought on the breakout that turned out to be just a wick, where would you set your stop at the open of the day? On the breakout. Oh, on this day right here, well, what would you wanted to see to tell you they had broken out? It was a close above that level. That's why people say, well, should we be buying, anticipating a move? No, why not be a little bit more conservative and wait to see for the confirmation? I would rather be paying up for something, knowing my probabilities are tremendously improved, than try to anticipate what it's going to do and then not have it do it. So, no, Theo, we're not buying or selling the moving averages. It doesn't matter where they've crossed. It's the signal. If you took everything off this chart except the candlestick signals and the T line, everything else is non-important. All it does is add to a little bit more visual of where people might be buying and selling. So a 50-day moving average crossing the 200 doesn't mean a hill of beans. The 20 crossing the 50, the 34 crossing the 50 or the 200, that's not what we're looking at. We're looking at what is price doing. Our real positive or high probability confirmation index is the T line. So we're down here in the oversold area with a hammer, which is one of the 12 major signals, right at the same level it bottomed out before. Or what's our strategy? We were short. We'd get ready to cover if it started trading back up through today's open. That would tell you they did support and they were confirming the hammer signal. Would you go long on Daku today or wait for the next day. Would I have gone long? No, because we don't know whether they're going to open this one tomorrow and head straight on down. Again, the whole probability factor using candlestick signals is waiting for the confirmation of that signal. We're not trying to sell at the absolute low because we don't know where the absolute low is. We're trying to buy or sell based upon a candlestick reversal signal. And all you have to do is learn 6 longs and 6 shorts. BIGC. Does that have a hammer? No, that's not a hammer signal. Remember, this is why you want to learn CR. Have you read your high profits candlestick pattern book? What is the criteria for a hammer signal? The tail has to be 2 times greater than the body. The stochastics are still heading down. It's broken this level. You had an evening star type signal. There's your hanging man, doji, bearish engulfing, closing back below the T-line and the 50. These are all things that in one visual glance, you can see immediately what investor sentiment is doing. Evening star signal, as I said, hanging man, doji, close below the T-line, close below the 50. And where else, what else told us that this was not going up further? It did this all right here at the top of this resistance level. Is J-hook a green hammer? Alina, no. A J-hook is a pattern. A hammer signal is a signal. So I'll see if I can find a combination. Would you say we should only buy long on a signal if it's above the open of the confirming day? Would you say we should only buy long on a signal if it gets above the open? Yes. When were we looking at? Daku? If I was planning on buying Daku, I'd want to see it come back up through the open, telling you it's confirming. How do we get the e-book? It's not the e-book, it's the book. I've written 3 books on candlestick analysis. The one you want to start with is the second book, High Profit Candlestick Patterns. That'll tell you, go into detail on how to analyze the 12 major signals and the different patterns that are high probability trade setups. How NEV long? How NEV long? How about V long? I don't know what the question is. Are you talking about Verizon? We'll hang on to your individual ones until, if it's Verizon, no, it wouldn't be going long yet. Only way to buy Daku tomorrow would be, have to be a kicker signal? No. Now, if it was a kicker signal, that would be a little bit more inducive, but if it opened here and started trading positive, that would be confirming the reversal. Becky, Jim, do we have a link to the products and services for the books? I recommend the books here because they're about half price of what they sell for on Amazon. Mike, we can do it in here on a Wednesday night. Oh yeah, and there's flashcards. There's the the mouse pad, and then the beautiful 2 by 3 foot glossy poster. How about Visa Long? Well, again, they've nothing here yet. You need bullish confirmation of your Harami, one of the 12 major signals. All right, let me see what else we got here. Haven't even gotten to the meaty ones yet. So snap, another one with a bearish engulfing gap down through that little support level. You're not quite in the oversold area, but if I was short, which I am, my stop would be at today's high, because logic says if you did a doji and they came back up through that level, that's where the bulls have taken control. APPH for an entry strategy. If you were thinking of shorting this one, the doji rule, if it opens lower, what do you got setting up? Probably a bearish doji sandwich, at least getting a running start. Yeah, there's the link for the flashcards up. Jim put it up. Let's see, where's the flashcards? Oh, there's the store. So, yeah, I can go through the store. Space, observe the obvious. So this is, when is it more appropriate to go short? Well, look how far away you moved from the T-line. That started the buying. But then look what happened at the T-line. Doji failure, there's your doji sandwich. And what was the trend already before it came up to a resistance level? It was already in a downtrend. Which way are your stochastics going? They're going back down. So that made for a high probability short position. So the reason we're showing shorts is because the shorts are acting much better than the longs right now. Can we buy snap now? Meaning buy the short or going long? I would still, I am short this, and the stochastics are still heading down. I would anticipate they're at least coming down to this level and then possibly down to the 200. Now that's also going to be a function of what they do with the NASDAQ tomorrow. If the NASDAQ opens positive and starts trading positive, that's a good indication that the high techs are all done as far as heading down, and they're at least going to bounce back up to the T-line. So I wouldn't be buying Snap, but if I was short, I'd be ready to cover it. What is our high probability trade setup? If you were buying this one on positive trading, you just have to watch to see what happens once it gets to the T-line. Whose handwriting is this? Eesh. Same scenario on ARCT. Nice little rollover, and they gapped down through that level. So what did that kind of imply? Wave 1, wave 2, going into wave 3. Hold on, ET. We'll get to the big ones here in a bit. Buy when it closes above the T-line. Just a very simple probabilities rule. You can buy when you see a candlestick buy signal and a close above the T-line. Yeah, let's see. One more on the shorts here. We recommended going short on INOS. look what this was telling you right here. Lots of indecision. Which direction was this trend? It was already in a downtrend. Then when they rolled over and closed below the T-line, that was a good indication it was time to go short. And what was an even a better indication? Well, they tried to take it up, and they smashed it back down. That told you that bears were definitely in control. ARCT, well, you've got another factor. There's no support. You're getting into the oversold area, so this would be another place where I wouldn't be shorting it here, but I'd continue to hold the short. Okay, the biggies. Which way is Apple going right now? Can't really tell. If you happen to have been short and it hit the 50 and doing a bullish engulfing, I'd cover the short position. But I wouldn't be going long because there's nothing yet to tell us the bulls have taken control. It's always when they take it up that gets me stopped out. Harder to short. Yeah, I don't. Amazon. Right now, if I was short, it wasn't quite a bullish harami because they opened slightly lower than yesterday's close, and stochastics are still heading down. So if I was short and it did open positive, I'd probably close out the position. But then I'd be ready to re-short it if it came back down through where they opened it. Yes, but Will, that's going to happen quite often. That if you had shorted this and then they took it up and stopped you out and then took it back down, what's our first thought? Oh, they took me out. I'm going to stay away from this. The answer is sometimes they're going to take you out of the position, but you have to know what they're doing, not they. Or you have to know what the price is doing. That if it traded up, you were short, you got stopped out, and then it came back down through the open, you got to ask yourself, are the bulls in control or the bears still in control? You re-short it. I would say probably about 20% of the time, I'll buy a position, get stopped out, but what was the reason you were buying that position in the first place? Because you either saw a good buy signal in the oversold area or a good sell signal in the overbought area. That doesn't mean it's going to move immediately in the direction you expect it. But if it takes you out and then comes back down and does what you expect it to do, you rebuy it. It just means that your cost was a little bit higher to get into that trade. Netflix, here's another case where you're right down in this area where it kind of bottomed out before in the oversold area. If you're short, what's the strategy for tomorrow? It better open lower and trade lower. Again, that'll be a function of how they open the NASDAQ tomorrow. If it opens positive, it's probably telling you this area is acting as support. You want to close out the trade. The probabilities are now going against you. And NVIDIA, same scenario. If you were short, you have a little doji harami. You're not quite in the oversold area, but the doji gives you a pretty good indication of what to do. The doji rule. It's going to move in the direction of how they open it tomorrow. So if they open it lower, they're still taking it down. Okay, so when you close out a position, we saw in this one, as soon as it gapped down, it was time to close out that position. No matter what we thought the prospects were, everybody else were making a different decision. Nimrod, a big breakout. Then it opened positive and started trading positive. Good for a big breakout. However, if it came back down through the open, what color does that candle start indicating? Well, it's just gone from a green candle to a red candle. As soon as it came back down through the open, after the bulls bought it from there, who's starting to take control? The bears. That's if you bought it on this day and it came back down through here, you closed out the position. Because if something good was happening, it would stay in this direction. It wouldn't be pulling back. Now, you still do have a breakout. And what's the normal reaction after a breakout? Kind of a 45 degree. So these are the trade setups that if it opens tomorrow and then starts turning green, you can start buying it because of this information right here, that there's been a drastic change of investor sentiment. How long do you wait after the open to determine the movement? JD will do a session on entry strategies in the members area on a Tuesday or Wednesday night, but it's all a function of how's the market opening and how is your stock price opening. Sometimes I'm in within 90 seconds. Sometimes it takes 45 minutes for things to right around and start coming back up. But that's a function of which way is the market opening, which way is the stock that you're thinking about buying opening. Real quickly, there's 4 different quadrants. If the market is opening positive like you think it should, and the stock is opening positive like you think it should, maybe in 90 seconds, I want to make sure they're still buying and seeing that they're trading it up, and then you buy it. If the market opens positive and your stock opens lower, well, you're not going to do anything. But if it starts trading positive and coming back up through the previous day's close, that means they just opened it lower and the bulls are still there. That's when you can be buying. If the market is trading higher and you're, let's see, did I do this right? No, if the market is trading lower and your stock price opens higher, you don't have to jump in right away. You wait to see what happens because of the market move to see whether they open it higher and back it off. And then the 4th quadrant is the market opens lower and your stock price opens lower. You're not going to do anything. It's not working. Again, hold on to your individual ones until I tell Jim to do the double line. Okay, I'll try to run through some of these real quick. Today, Avid did a kicker signal, breakout. That implies probably a 45 degree. So knowing that, you can have now different strategies of what type of spreads you might want to put on. Could you explain the meaning of the double doji, and if it appears on a major trend line, what does that mean? Got a bunch of double dojis. I was going to type one in. That's not it. This is kind of a double doji. Yeah, kind of a double doji. Let me. Nah, I'll have to find it. I know where they are. I just have to come across it. Okay, so Avid broke out. BCRX, kicker signal breakout. So what's this imply? Especially with a kicker signal and a big day, there's been a strong change of investor sentiment. More than likely, you're going to be in a 45 degree. Did Oracle do a double doji? This right here would be kind of a double doji. They've taken it up. They've consolidated as a doji, consolidated as a doji. And remember what the nature of a doji is, indecision. So if they're selling it off or backing it off indecisively, that means they're probably just taking profits. That you start watching to see if they open up positive the next day. CLDX, that was kind of a bearish double doji. Not one here. Oh, let's see. No, that wouldn't be a double doji. However, that would be kind of your double bullish flutter kicker and confirming your J-hook pattern. I'll find one. I know I've got one because we just bought one off the double doji. I'll find it. So the reason the patterns are more effective is because they are a buildup of investor sentiment. And we know what the results of a fry pan bottom should be, a strong breakout. In this case, if it was a strong breakout, what would be the magnitude of that move? More than likely, we could see a wave 1, wave 2, going into wave 3. Lows, not a fry pan bottom, but a J-hook type pattern. And there again is your bullish flutter kicker signal. Now remember, the strongest candlestick signal is a kicker signal. So look what they've done here. They opened here, closed here. They've gapped it up the next day. Just that information alone says there's a strong reversal. But it did a doji. But what's our doji rule? If they trade it positive the next day, you've got a bullish flutter kicker. Why do we call it a bullish flutter kicker? Because if you pulled out this doji, you essentially have a kicker signal. Can we do options on lows? Yes. Barrick gold is kind of. Usually a double doji is a doji, then a lower doji, then they gap it up or trade it positive the next day. That's more of a double doji type setup, even though they're more hammeries. But you can see what happened. The scoop type kicker signal, and then a pull back right to the T line. And for those folks that are new in here, the fact that it pulled right back to the T line is very significant. It's because nobody has the T line on their chart. So when they pull back right to the T line and bounce up, it's what we know is the natural support and resistance level of human nature. It's the T line illustrates that. Double doji also applies to the downside. I only account wave 1, wave 2, wave 3 because I'm only trading the next wave. We're not using Elliott wave or anything like that. We just know that prices move in waves. So if I was buying this one, I would say here's wave 1, there's wave 2, there's wave 3. When it gets up here and starts pulling back, then I count this is wave 1, that one's wave 2, waiting for wave 3. Okay, let's see. We're getting OCDX. Oh, OCDX. So there's kind of your best friend signal breakout right off the 50. And this is why candlestick analysis is so effective, is because it's telling you exactly what everybody was doing right at a major support level. The handle does not look flat to me. The handle does not look flat to me. Oh, right here? Yeah, that's why I was saying it's kind of a scoop type pattern. But the fact that it did a little kicker type signal off the 50. So what's the normal price movement of human nature? When they come up through a resistance level, they come back and test it to see if it's going to act as support. You see a candlestick buy signal, what's that telling you? It's acting as support. Why do you want to get in early? Because everybody that's watching to see what they can see on their charts, which is the 50-day moving average. That's right, because the vandals took the handles. They're now more confident that it's not trading off, but it's staying up above the 50, and they start jumping in. We just have the visual recognition of it much earlier. A belt holds system, signal, where I come up with system. Bulls and bears, bulls and bears, bulls and bears, bam. They knock out all the bears, and now there's no bears in front. If this opens positive, get ready for wave 3. And IMND, that's a nice rollover. This one you could be shorting. Where would have been a good place to buy MAG? I meant when you have known with confidence there was a good time to buy, to get in, and a good question if any of the stocks. It's knowing what the patterns are, or what human nature normally does. When I saw this trading positive, especially coming back up through there, that's when you can trade or start buying. Because what was this signal right here? This was a kicker type signal telling you the bulls were definitely in control. They pulled it back indecisively, bounced off the T-line, and then traded positive. What was it telling us? That our bullish signal is still in effect. Let's see, we did MAG. There's your belt hold. I don't know how this got on here, but same thing. Wiped out a lot of sellers. Now, where do you want to be buying this one? If it starts trading positive, you could start buying. But you definitely want to see it get through this level. What does this tell you? The supply of sellers, supply of buyers. Now, bam, they take it out. They take up all the sellers. There's no sellers in the way anymore. Get ready for wave 3. Can you explain the chart BNTX? At a belt hold, it appeared. Closed below the T-line yesterday, and then yesterday, I'll look at BNTX. Oh, that's really not a belt hold in this situation. Here is the obvious. Carrie, it doesn't matter why it happened. All we're seeing is what the reaction to it is. This I wouldn't call a belt hold. This is just an up day in a downtrend. Greg, this was supposed to be the stop loss training, but somebody screwed up and thought they weren't doing it tonight, which was me. We will do the stop loss again, and we'll do it very soon. We might have to do a special session. We might do it maybe Tuesday night. That was going to be a members night. We might open it up, and I will write down. Yeah, I looked at my calendar wrong today. Stop loss Tuesday. Yeah, I apologize. What do you mean by trading positive? What does the price have to be? No, above. Yeah, you want it to be above yesterday's close. But if I'm looking at something, let's see, I should have written down some that were going to act well. Let's see. If I was buying this one, there's your kicker signal, breaking out. If I was buying this one on positive trading, I'd want to see it trading up here. And I'd want to see that the market wasn't opening up down 200 points. So if the market was opening up down 200 points and this was opening right here, I wouldn't jump in. I'd wait to see what everybody was doing based upon knowing the market was trading lower. If the market opens, looks like the Dow is going to open up 40 points and the NASDAQ's going to open up 15 points and this opens positive, yeah, I'm getting more ready to buy on positive trading. If I'm ready to buy this one on positive trading, I don't want to see it opening down here. That tells me the bulls aren't there. So positive trading is the market's not falling out of bed and the stock that you're looking at is showing some strength. So here's another big breakout. Now, the reason, here's why Brad was saying that you learn 3 or 4 different strategies based upon the signals. There's your best friend gap up. Expect a 45 degree. Now, I don't know how long that 45 degree is going to last, but maybe I buy a 52.50, 57 spread for 2 weeks out. Maybe that's my strategy. Are there daily chat rooms? Yes, Howard. We are. Oops, you're getting ahead of me. We are going to be doing a 2-week free trial for or to come into the chat room. We've got about 200 people in the main chat room, and this is an excellent way to learn how 2 things. To learn the candlestick signals and patterns much faster because you can ask questions, and I'm usually in there or watching all day, and there's plenty of people in there that know the patterns and signals. So not only can they help you with that, but they will also point out charts that are looking good so that you can go to those charts and say, oh, why is this one looking good? They're saying it's got a J-hook pattern. Or I've also got an options room. We've got a few dozen people in there because the terminology is different. Now, I put out, in the members area, I put out 2 or 3 stock picks every day. And those stock picks aren't so you just have stock picks. We do them in a 2-minute video each night so you can see why or hear why they're being recommended. So it's a constant learning process. A free trial for 2 weeks in the chat rooms. There it is. There's the link. Becky just put in the link. When you say how the market opened, do you mean looking where NASDAQ and other indexes opens? Yes. If the pre-market futures are saying the Dow is going to open up down 200 points, obviously we're expecting the Dow to open up down 200 points. If I was ready to buy something, I probably wouldn't be jumping in until I see what the reaction is from the market. Now, on the other hand, if it looks like the Dow is going to open up 100 points and it's still in an uptrend, and the stock I'm looking at looks like it's opening positive, I'm probably going to be buying that one within a couple minutes. Is the member chat recorder to view later on? And here, yes, this one's being recorded. During the day, no, we don't record those just because of the overload it would be. Where do I access pre-market futures? Everywhere, Greg. If you've got a trading, you're trading with one of the E-Trade or Schwaber, they've got it. Or if you turn on one of your financial news stations, like CBNC, or Fox News, they usually have the pre-market futures down in the right-hand corner. Okay. So anyways, whoever was asking about this supposed to be a stop loss, I screwed up. I was dilly-dallying because I thought Dr. Barry Burns was going to be here tonight because I misread my calendar wrong. Can I? E-A-V, E-A-V-C. No, I am just doing this for P-A-V. Ah, P-A-V-C. Well, how could I do that? Well, I'm not doing anything right here. Geez. E-Z-Z-A. Papa John's. Kicker signal. I'm guessing this was off of earnings. PVAC. Thank you, Rob. Geez, I've been here all night. So kicker signal, expect this trend to continue. So now you can figure either buying the stock or an option strategy. And that's what we usually discuss in the options room, is which strategies are the best for each signal and pattern. So here's that fry pan bottom. Now remember, the difference between a signal and a pattern is that a pattern will usually break out when it's already up in the overbought area. So I wouldn't be afraid to be buying this one. Now that's because all the oils are moving well. Oh, and here's the one that was kind of the epitome of a stop loss. If this was your double bottom and it got up here, where were we looking for a breakout? Right here. So if it traded positive, it's doing what we expected it to be doing, breaking out. But as soon as it came back down through the open, what should we be doing? Closing out the trade, because if they're trading back below the level that told you the bulls had taken control and broken out, as soon as they came back down through there, that told you the probabilities went against you dramatically. That was a while back. Oh, that's not what I wanted to show. There was a bearish kicker signal. So the reason you want to recognize the kicker signal is if you have an uptrend and they have enough strength to gap it down below the previous day's open, there's only one thing you need to do. Hit the sell button as fast as you can. I used to see this, and what my first reaction was, oh man, I had such a good profit. If they'd only take it up one more time and let me out, I'd be so grateful. But I discovered if they're gapping down below the previous day's open of an uptrend, close it immediately. It does three things for you. One, it closes you out and has your money back in your account. Two, it keeps you from sitting here all day worrying about this bad trade, saying, oh man, if they take it up a little bit, I'll have to come out. Oh, now it's trading here. I should have come out on the open. Now it's trading down here. Oh, I can't. I should have closed it out here or up here. As soon as I close it out, it's going to go back up, and you finally wasted the whole day, and you finally close it at the end of the day. That's what I usually did. Now, when I close it out immediately, I know what should be happening, a bearish kicker signal. I can reverse the trade immediately and hopefully get back some of the loss that I made by being now in a profitable short position. So this is why you want to know what the signals tell you, so that you can see what might be forming against you, so you know immediately to close out that trade. Okay, again, I apologize for not having the right criteria, or not the right criteria, the right training for tonight. Here's another one that observe now we've got the 50 and the 200 simple moving average. We also have the 34, which works relatively effectively. So hopefully, as you can see on my charts, they aren't that cluttered up. 50, 200, the 34, the T line, and this little green line is the 3T line, which works in conjunction with the T line. But as soon as you saw a sell signal to close below the T line, what did it tell you about the 34? They weren't going up through that. Then another sell signal. What did that tell you? You're in a downtrend. How long do you hold on to this short? Until you see a buy signal. Now you've got a doji in the oversold area. Where should your stop be? Just above the high of today, because logic says if you're in the oversold area and you know the doji rule, they're going to move it in the direction how they open it after a doji. You want to be ready to close this one out. Did we not do Apple? Apple, I would have closed out a short position today, but I wouldn't be going long. So right now I wouldn't be long or short Apple. Okay, are there any general questions on candlesticks? As I mentioned, we were, Becky, you want to throw the link in again? Yes, keep your flashcards right there next to your screen. Yep, and for folks that want to just try out for a couple weeks to see the logic behind candlestick analysis, the reason we try to expose as many people as possible, because this is not rocket science. This is the recognition of what investor sentiment does, and the Japanese rice traders happen to put it into a graphic depiction for us to tell us when there's a high probability of a reversal. There you go. Yep. Okay. Any general questions on candlestick analysis? Oh, there's a double doji type setup. Big up day. There's your reversal. Hammer doji in the oversold area. Bullish confirmation. A close above the T line. May have bought on that day. Wouldn't have bought on that day. But that day, when it opened positive, you want to be buying right away. That was telling you the oh, John, I don't know whether we got a free trial. If not, we will get one set up. If you will email Abraham at candlestickforum.com and ask him about a trial in the options room, he might have something already set up for us. Is current? No, that's not a double doji. A double doji is when they start it up, they consolidate, and take it back up. Right now it's just dojis. Hold on, Mark, until I tell Jim to do the double line, which is going to be right about now. Jim, do the double line. All right, in 3.8 seconds, do the next double line. Oh, that was the one that I was trying to get to, is ACAD. So this is kind of a little scoop type pattern, but there's your morning star signal that kind of makes a scoop type pattern, which would cause a slingshot effect on positive trading tomorrow. So what do you want to see tomorrow? You want to see it open positive. I must have had another page where I wrote down some of the good trades, and I've lost. Just a bad hair day. Okay, let's see. Whoops. All right. Run a kicker type signal. A true kicker signal shouldn't have the tail, and I wouldn't buy this one until it does close above the T line, but it's a good strong signal. CNQ, there's your kind of your scoopish fry pan bottom. You can stay long as this stays above the T line. Roku, stay short. Just as a safety stop, now that you're in the oversold area, use today's open. It's possible to be a reversal of the great earnings and a bounce of, isn't it possible it will reverse with great earnings and a bounce of the 200? What would today's candle tell you? Today's candle tells me, did they announce earnings? Today's candle doesn't tell me anything. This tells me the sellers are still in control. And it didn't support at the 200. It closed below the 200. What did I just type? Rocks, all you can do here is stay long. Now, if this opens positive, you got kind of a J-hook pattern, little double doji setup. There's your kind of your double doji setup. You stay long on this one. These are high probability trade setups. When you see a big move, indecisive, and then they open up positive the third day. QuantumScape, yeah, you can stay short on this, but just watch to see what they do right here, which is where they almost are at this point, to see if there's a double bottom. Yield, you just stay long. Let's make this. And if I was long, you stay long. If I was buying, I'd wait for it to break out through that level. BLRX, oh, that's ugly. Yeah, that's ugly. You can buy this one on positive trading, but if it opened positive, I wouldn't want to see it come back below today's open. All the golds and silvers seem to be working well. Moving up, DDX should be acting well. Yes, now it's trying to do a J-hook pattern. It touched the 200 and bounced off. When they stretch up something like this, this is where you can flip to your 10-minute chart. And if that was the peak and started selling off at that point, that told you, nope, they aren't going through today. So you might take profits, and then if it comes back up through tomorrow, you can buy it back. Which means I'm sure Nuggets in a J-hook. Expect that to go to the 200. You stay long on this one, Rocky. Okay, Roku's up 27. All right, let's take a look. So this one, you have a shooting star type signal. I don't know why that line's on there. Right about this level. So you definitely want to see it open positive and trade positive. If it opens lower, it's probably coming back to test the T line, which would be in an uptrend. So Roku is up 27 bucks right now, which means 27. So it's back up in this range. So that's where you can start watching to see if it's going to do a kicker signal. So if you had been short and they open it up here and start trading positive, close it out immediately. ACTC, stay short. Run, a kicker type signal. I would have covered the short today, but I wouldn't be going long just yet. At 310, all right, thank you. And Roku. And Cliffs, you stay long. Now, what was the added bullish indication today? They came right back down to the T line that nobody has on their chart. So it hit a natural support level, traded back up. This one, you want to be buying if it opens positive tomorrow because you got kind of your double doji setup. And if it trades positive, what's it telling you about this level? Your fry pan bottom pattern is breaking out. Yeah, PEBF, remember, just because it doesn't move up every day doesn't necessarily mean it's heading down. What would we expect on this breakout? A 45 degree. So you be a little bit attentive, but as you can see, it has up days and down days. You're worried, you should be more concerned that it's in a 45 degree or more, seeing that it is in a 45 degree. Ford, nothing here yet. Bigger. Wouldn't be doing anything with Ford right now, just not enough strength. Would you start buying if the trading positive above the T line tomorrow on run? And would you wait till Monday to see if it closes above it? That would be up to you. I would wait to see if it's going to close above the T line. If it opens positive and you want to be aggressive, you want to definitely see it close above the T line. Goose, you can get ready to go short. What was the added evidence here? They couldn't get through the 50. Where's your next target? First target right there. Second target would be your 200-day moving average. Freeport, ruh-roh. Oh, man, I kept us way over time tonight. Freeport, you just stay long. Definitely want to see a positive open tomorrow. Please comment if the 50-day moving average moves above the 200. The only comment is it doesn't mean a hill of beans. We're not trading the moving averages. The only thing that you want to can look at if the 50 crosses the 200 or the 50 and the 8 cross, or that's not even relevant because nobody has the 8 on their chart. The only reason you'd look at a cross of a moving average is to see what type of signals were occurring at that level. Remember, the number one criteria for candlestick analysis is the signal itself. Everything else is just a confirming indicator or adds to the credibility of the signal. Hold on, I gotta wet my whistle here. Okay. Oh, I don't know if that's going to come up over here. I doubt it. F-A-N-Y. No. This one, you stay short until you see a buy signal. Long analysis, there is no long analysis. Still heading down in stochastics. You had a bearish left-right combo, a hanging man. I would think you're heading for this level right here. That one's got a nice J-hook type pattern. Notice all the indecision sitting right here on the 50, and then they've told you what their decision is. So it'd stay long on this one. Just broke the upward channel. Not too late to buy. Earnings next Tuesday after the market close. You can be buying. If I was buying on positive trading tomorrow, I wouldn't want to see it close back below the halfway point of this candle, which would put you back into the trend or the trading range. Morningstar signal, followed by a doji sandwich. This is what you call your McMuffin. Morningstar signal, a big down day, a day of indecision. The third day closes more than halfway up this candle. Then it's followed by a doji sandwich or your morning sandwich, which is your McMuffin. The Morningstar signal is one of your 12 major signal reversals. The doji sandwich implies there's more upside. When you combine the two, gives you that much more credibility that the uptrend has started. MPC, Marathon, stay long. Occidental, you could buy this one on positive trading. ConocoPhillips, if you're a big company buyer, I'd buy this one on positive trading tomorrow. Oil, is that the one you wanted? Oh. OII. That's a fry pan bottom breakout. You just stay long. And there's a fry pan bottom breakout about to occur. I'd buy this one on positive trading. There's your doji sandwich, implying there's more upside. AMAT, stay short. If you're short, let's see what, boy, if you're short, it has to open lower and trade lower tomorrow. Other than that, I would not be long or short this one. Did we do CDEV? This one, nothing until it breaks out through this level. CNQ. Oh, it's hard to say. Let's see. What I forget what PVAC looked like. Yeah, they're both. Yeah, just pick one. This one, nothing. You should not be in this one. You can't short it because it's below $3. I'd be out of this trade. Tesla, you stay short. And Boeing, you stay short. You do have a doji, so put your safety stop up here at the, up above today's high. OCDX, a best friend type signal, and you're sitting right there, which would tell you if it opens positive, it's breaking that resistance level with a best friend signal off the 50, you can be buying that one. Run, we did. You could buy that one on positive trading. HLI, nothing yet. You're at the bottom of the channel, but I wouldn't be buying it until it does close above the T-line. Again, the T-line just improves the probabilities dramatically. Nothing on this chart. Okay, Al, that's kind of a nothing chart. If you're short, you can stay short, but you can see you're in a channel. So that's a long answer to say I'd be someplace else. There's better charts out there. This one you can get ready to go short. The dumpling top. First target right here. Second target right here. Third target, the 200. How long are the members' daily sessions? The member room is open in the morning. It's open all day. I come in a couple times a day, and I'm usually sitting here watching because I trade during the day. But if somebody has a question that nobody's answering correctly, I'll come in. Or if we see something moving, I'll come in. But usually around lunchtime, I come in for, it was supposed to be about an hour. It's now gotten into be about an hour and a half. And then I come back in for another 30 minutes near the end of the day. Trip, stay short. Use the T-line as your stop. All right. Okay. Roku up. Mike, yeah, if you want to add, now the first question would be, why would you be long this position? And I say that because this was me years ago. I'm thinking, oh man, I'm dying. When is this going to turn around? And then I finally started thinking, wait a minute, I shouldn't even be thinking that. Where should I have been out of this trade? Right there. That taught me to be a lot more attentive when a sell signal occurred. And I wouldn't be adding to long position until you see a reversal signal. Wait a minute. A, B, and B. You stay short. Look at your bearish doji sandwich. Stay short until you see a buy signal. What's the symbol for that one? R, D, L, X. Mike, no, there's absolutely no reason to be long this one. They're still selling it. Deer, you can buy this one. It's not very exciting, but right now it's heading in the right direction. You had kind of a double bottom and a bounce off the 50 with a doji sandwich, breaking through this level. I would suspect it's coming back up into the trend. Oh, okay. And Lily, you can stay long on this one. You could go long. Again, it won't be very exciting as far as percentage move, but it's heading in the right direction. Mud, boy, you can see there's lots of indecisiveness up here. If you were long, there's only one thing it has to do, which is open positive and trade positive. If it opens lower, stochastic's rolling over, you have sell signals, you close it out. SPWR, here's one. Again, that's not a signal. That's just an up day and a downtrend. Now, if it had opened positive and trade positive, you might have covered shorts. With the opening lower, you stay short. Two days after earnings report, there's your best friend breakout. It's still heading higher. Kind of expecting the same thing with Avid. Suspect it to be moving higher. Yeah, you need to have confirmation. The signal tells you there's a reversal potential. You want to see the confirmation next day. Carrie, this is the question that you would say if you're asking it, where would you want not be buying something? In the overbought area, unless there's a pattern breakout. So the rhetorical question would be, where should you have been buying this one? At the pattern breakout. So right now, this is a hold, not a buy. But the learning process is, man, that's a good move. What started that move? And I recognize the fry pan bottom and then the breakout. So when you ask whether it's too late to buy, yes, but there's probably a dozen or more excellent trade setups today which have much better prospects. So you missed it on Tuesday? All right. Don't worry. There's another one coming down the road anytime. NTNX. No, NTNX. Nothing exciting here. Nothing exciting. It's not a bullish engulfing signal. There's better charts out there. We did Apple a couple of times already, I'm sure. Wouldn't be short, but I wouldn't be long. The S&P staying above the T line. Right now, you would stay long. EQX. That's kind of a reversal, not very exciting, but you could buy it if you like it. And we did PBF. You stay long on this one. Not a bullish, I don't remember which one, Greg. If it's not a bullish engulfing signal, remember, the Japanese rice traders showed us signals where the probabilities were extremely strong. There was a reversal. So if you're looking at a bullish candle, but it's not a reversal signal, the probabilities aren't there. Otherwise, the Japanese rice traders with 400 years of watching the charts would have said this is a sort of a buy signal, and it's not. So if you see an up day occurring, if it's not a signal, there's dozens, at least a dozen. No, there's dozens each day that give you much better probabilities there's been a reversal signal. A gap up on builders. First source, you can still buy this one on positive trading, the doji roll. If you come and go in the members area, then how do I catch the 2 or 3 recommendations you give? Each night you go to the stock picks area in the members area, and you do that. Then if you get our morning comment, I usually go through and say, what did we say today? Darn, I'm trying to, Sid was one of the recommendations. So you could be buying this one on positive trading. So you've got the video at night or the early before the market opens in the members area. And then everybody's usually mentioning them in the chat room in the morning. That one's not coming up, HZMP. And LUMN, if I recall correctly, this is a nothing, or it's probably a good chart. It's not a reversal signal, but the fact that you have this big cradle type pattern tells you could be buying. So when you see something that's a pattern without a reversal signal, you can still buy it, but you have to be a little bit more diligent when it gets to a resistance level. to see what it does at that level. All right, so the plus right now is that this market is not selling off, which means any pattern breakouts are going to have a little bit more energy to them because there's not any hesitation from sellers out there. So things like this, if it opens positives, got a good prospect of coming up here and filling the gap. All right, everybody, kept you way past bedtime. We'll see you bright and early tomorrow morning in the chat rooms. We'll see you then.